Good afternoon, everyone. We are the 14th of December, wrapping up after quite a productive day for the market. Started off pretty hard to the downside, and we had quite the bounce through the day. It traded very well technically. Not a lot in individual news today, other than what we started off with of a very hot PPI number, an all-time high. But from the version that we get now started back in 2009, which actually means the number's probably a lot higher from what's actually used these days. So that's the only real news there. The main concern or the obsession is what the American Federal Reserve is going to do tomorrow, and then what the Bank of England and ECB are going to do the following day. So we've gone through that a number of times now with the taper expectation is that's going to speed up. Remember, this was the meeting that Fed Chair Powell was going to look at where the market is. Well, he's had record CPI and PPI, so that's what the market's expecting. 2 rate hikes next year. So before we go into the charts, we have Madavi here, Nasdaq expert, and we have Alex joining us from Markets and Mayhem. So just a quick little hello and word from those two guys. Alex, anything before we look at the charts, mate?
Yeah, so today was a pretty interesting day on a couple of different fronts. I was watching the Nasdaq, the Russell, some of the moves that are happening in commodities, and then also volatility and some individual shares. And I was doing some trading primarily in Russell, Nasdaq futures and volatility futures. So there was definitely opportunities on both sides, on the short side coming in, and then on for the Nasdaq and the Russell, and on the long side coming in for volatility, and then reversing that just after about 1 p.m. when we started to see the markets look like they were putting in a bottom. And on individual shares, some of the high beta names seem to get a nice bounce off intraday low around the same time, around 1 p.m. So for me as a trader, I was looking at this as just a short-term choppy tape, take advantage of the volatility, take some profits, on some of these shorter-term trades and kind of de-risk a little bit ahead of tomorrow's Fed decision. And there's a lot of variability. I think the market's expecting 15 to 20 billion in reduction of taper and 2 to 3 rate hikes. So we got to see what happens with that tomorrow at 2 p.m.
Great. Thanks, Alex. And Madavi, anything? Well, firstly, great to see you. Thanks for being here. Anything?
Well, I mean, the markets are pretty good moving for a week before the holidays and stuff. So there were some good movements in the mornings and afternoons and some stock plays. So, glad to have some movements before the holidays.
Well, that's true. I mean, Christmas is what's the date today? So 11 days. So a lot of people have packed up shop. I know myself, I've wound it way down. Liquidity changes. A lot of blokes have locked in their profits for the year for their bonuses, etc., which explains a lot of Apple up and down. And oil guys, most of the big guys have done that. Now you get your producers hedging, etc., for the tax, the whole tax treatment. I mean, not our tax, but the oil tax. So let's start off with the good old S&P contract. So as you know, a lot of what we have been curious on has been let me just bring that up so we can see it a bit clearer. Make it bigger. There we go. Has been the tanking correction that we're expecting. So we got that today perfectly. So it's good. The good thing I like with Murray Math and Ichimoku, the Novawave, that Novawave combination, is you get to plan ahead what can happen. So we had that double top. We saw the sell-off. It held the tanking perfectly. And this is a daily chart. And the caging was dead flat, which remember is a target for the downside. It held that, didn't breach it. It did go under it temporarily today. So we did do a few little, and we'll go through that in a bit, a little bit of risk management down there. But that gave you a good buy and correction. We do have the Fed tomorrow. This can be an A, B, C, like A, B, and bang, C, that's your bear. Your bull is your fourth wave, which would be is a full C, right? So this is your first wave up. You're correcting it, and so that's your bull case if all that holds. It's all got to hold. On the hourly, you can see it. Let me make that bigger for you. That was that channel that we were talking about this morning, and we've been watching, right? We got that nice move up, tested it, and then that was that pop to new highs. You can see how it worked. So you're looking for repetition, because sadly, most people trade not to lose, rather to make money. That's where break even is. That's why often option at open interest points or different outside gamma points are so efficient. We had that break down, see that? And it turned out to be a fake break. Look what it was. It was testing over here, this high. So again, repetition. Remember, going back to where people are break even. People again that were short here, like, oh, thank goodness. That's what I'm looking for. Nearly so close. They held. Then we got back into it. We got back into that channel. We blew through the orange, which is the Tenkan. Remember, we had those flat lines like magnets, and look what the top was, that Cajun. So it was a really nice trade we all did today off here. And let's go over to the 5-minute, because that's a good indication of how it all went down. So here, one rule we have, most of us is trading, I'm sure most of you listening, very simple off the pits. When it breaks, it sells off and doesn't go to new lows, that's a buy usually, because this is scalping buy I'm talking about now, because the stop losses just didn't get triggered. So what we noticed as that was happening, and Alex and Madhav will talk about this in a bit, but whilst the S&P wouldn't break up, they both trade the Nasdaq futures. I don't. The Tenkan didn't break here. So this is this area here. We came back down, and we did a little false break, right? If you're purely trading Tenkan. That's why I say on a 5-minute chart, have a bigger view. We know where it's all coming from. So people make the mistake of thinking Ichimoku is just all about this. It's not. We noticed this little downward sloping bull flag forming. Yeah, probably technically it's more a wedge because we didn't have the pole, but let's not get too carried away. Here was the test where we really liked after that held, because that was also a psychological point. 4,600 on the March futures contract held. We broke up from that. We tested that breakdown here, and then we got that acceleration. So this is on a 5-minute chart. We actually flipped and did a fractal. Look at that, just perfect. I'm sure if we worked that out mathematically, that's to the cent. If we go back to it, that's that move there, right? So enough of me. I'm going to bring the other guys back in. We're going to talk about the Nasdaq. Let me get that up for you guys. You see that?
Yeah.
So, and let me get it. There we go. So let me make it a bit bigger. There we go. So where's my date gone? Why is it not showing that? There it is. Now we can actually see today. So this is today, right? The 14th. So if you want to, guys, well, actually, Madhavi, do you want to start off? Because I know you came in short this, and then we'll bring Alex in.
Yeah.
So
Go ahead.
So, today the Nasdaq was trading pretty clinically, as you like to say, mate. I mean, it pretty much retested a range that it had been in previously. Like if we go back to December 2nd, I want to say it kind of tested this range that day as well. We held that level rather than plunging lower to the December 3rd low. And then once we held that low and kind of made a higher low around 1 p.m., we saw bulls really start to come in and bid a lot of these shares up off their lows and bid the index itself off its lows. And of course, Apple is a great stock to watch for signs of directionality. And we saw Apple start to make, higher lows and higher highs into that. Although it didn't carry through all the way to the close, it was certainly a good little uptrend that it was able to make intraday. And so for me, trading the Nasdaq, I was watching that 12.2, that December 2nd level. When it held, I was covering my short. And then when we made that higher low and we started to test the tank in from below and we made it above it, that's when I started to put on a long position. I got out a little bit before we tested the Kijun. I actually switched up to the Russell because I thought maybe it would play catch up. And I scraped some points there as well. But yeah, I think the price action into the close was pretty constructive. It's similar in that trend channel you showed in the SPOOs or the S&P, where it kind of tried to retest and carve out that lower area, which also coincides, by the way, with the 50-day moving average. And it bounced pretty meaningfully from both those areas. So it does seem like we had a bit of a sentiment washout midday. Volatility was rising. And then one of the clues that kind of told me that maybe this thing was bottoming and also gave me some conviction to get long was that volatility wasn't rising as prices were dropping after a certain point. Like after we got to the high in volatility around 11 a.m., we just saw lower highs and lower lows in volatility and into the close. And that gave me some idea that, fear was starting to drop, that maybe people weren't hedging too aggressively into tomorrow's Fed. Maybe they put those hedges on a little bit earlier. And some of those directional put flows, what I was watching at the index level, they kind of capped out those hedging and put and directional flows, I should say. They kind of capped out mid to late day. And then as we saw in the afternoon when we were getting bid up, we saw the opposite. We saw more call heavy flows and more put selling. So, premiums started to change in the options market. So there are some signs of an intraday turnaround. Of course, we can't make much of it. A lot of these rate sensitive names are in the Nasdaq. So the way the Nasdaq behaves is largely going to be contingent on the Fed. But one other thing I want to mention just before I pass it over to my buddy Madavi here is that the Nasdaq has gone through a rebalancing recently. So there's some stuff that's been added to it and some stuff that's been removed from it. So that's one thing to keep in mind. We're also
talking about Lucid.
yeah, Lucid, Zscaler. There were some other ones that were added in there. And then also, we're coming up on quad witching, and there's just a lot of insurance that's been put on the index level that's going to be rolling off. So, those hedging flows and some of the other rotations happening underneath the surface as people roll contracts, it's kind of exaggerating some of these price moves. But Madavi, why don't you take it from here, my friend?
Oh, sure. Well, I came in today, short some snaps, and last night I started shorting the NQs. And market really, we were up in the middle of the night, and by the time the market opened, we started falling off, and we picked up speed, and that was pretty exciting. So, but towards the end of the day, we started to flatten out. It might have been some of the things Alex might have spoke about, or people started buying the Nasdaq, but it picked back. It went up about 200 points from the lows on the NQs, I believe.
Yeah, it looks like so 15,740 up to 15,920. Yeah, so nearly 200. Quite the run there.
Yeah, so it was extremely volatile. I did good in the morning. In the afternoon, I held my own, but also I traded some stock like GRTX. I'm still in it, obviously. It had a little move, little teeny stock, a biotech one. So I got into that, and I did a couple other trades, but the big ones was this one and the NQs. I did some S&P trade. I think I did a couple, but besides that, let me see what else I did. Those are the main ones that I did. I did a couple of other trades. Oh, we did Donnie. That one didn't work out so well. And
yeah. So that was over some announcement, right? We found out Bumble or something. So Donnie is what we call in this. We tend to name things so we remember them. So Donnie's actually the symbol's DWAC. I couldn't tell you the real name of the company.
I did this ESSC. I got a good run on the upside of it. and then it started dropping, right? And I got out. It went all the way as high as 24. I got in at 21, at 26 bucks. It went up to. I got out of some at 26, and I was keeping some thinking it was going to run to 30, but it started dropping hard, and I shorted that at 19.95, and I did well in that. That was my other good trade I had. I don't understand why that thing just fell off. It just fell from nowhere.
Yeah, I can't remember. I was all eyes on the futures in Apple at that point. So I don't, and I actually, we were going to check it, but we got kind of sidetracked. But yeah, some of those high flyers, particularly this time of the year, can be pretty wicked. I think Alex said that too about thinness. Everyone's kind of ready for Christmas, and a lot to do with these options going on now. They're basically, if you just think you work for Goldman or someone like that, Morgan's, you want your bonus. So you put on a lot of options if you want to keep your stocks on and the way you tax on puts and straddles. I don't want to go into all that too much, given I'm not an accountant, but they do affect these positions. So they show up because they're going to be in there until next year, right? So they will show up in your ladder as open interest and all that. So keep all that in mind. So they're not going to change because they're there for a reason, right? They're locking in their position against whatever the underlying. There's a lot of that goes on, and it doesn't really matter until the market gets thin, and we're thin because it's Christmas.
And one thing about this ESSC is normally these high-flying stocks, you're not able to locate shares to short them. And today, this one, there were shares available. So I lucked out there.
Yeah, that was a good one too. And I wonder if that's some of the hedge funds taking a break that actually often take that short.
So that's about it. As for tomorrow, it'll be probably volatile in the morning, and then going into the Fed, probably going to slow up until after he says his words. I don't think he's going to say anything other than we know about. I mean, he might speak about tighten a little bit faster, but it's going to be QE first. So all the bond buying. So they'll probably slow that down, and probably first of the year, I don't know, first quarter.
Well, I brought up the Russell chart because you two guys trade that, and that's been the weakest thing. And actually, it was outperforming to the upside at the start. So it looked like it was getting respite, but by the end of the day, you can see that just never matched the Nasdaq or the S&P.
Well, now what the Russell's does the opposite of the Nasdaq. So if the Nasdaq's going down, Russell's picking up bids. I think that's where people are going to hide. Well, they're dumping one. So
yeah. So that's unusual because this was the first they kind of did that, wasn't it, guys, for a while?
I don't think so. I think they've done it before.
No, I mean, it's been the weakest one. That's what this morning it was the strongest.
But Alex has been trading that longer than I have, so.
Yeah. I mean, what have you been noticing there, Alex?
I think Alex must have stepped out.
Oh, okay. So
sorry, what was that?
Oh, wait, Alex. The Russell.
We're running one notice. We were talking about the Russell there.
It's been inverted compared to the NQ. So if the NQ is going down, that's going up.
Yeah. So what I saw in the Russell today was really interesting. We started off the day with the Russell Strong, and it was actually in the green when everything else was starting to test, going red. And then it sort of gave it all back. And what we saw during that process was a deterioration of breadth and really small caps giving back their gains and then being one of the leading losing sectors, especially small cap growth. So there's more rate sensitive growth names. The IWO ETF, for example, a good representation of that factor, was down the most, right? And then the Russell 1000 value, which is a good proxy for large cap value, that was down the least today. And that was a delta of about 1%. It was 0.98%. of outperformance of the large cap value versus small cap growth. So there is decidedly some rotation going on underneath the surface, people kind of seeking safety. Low volatility, large caps were also among the least beaten up in terms of factors. And then we did have, we had banking and consumer staples and some of these defensive names had a bid today. So it looked like underneath the surface, people were trying to de-risk not only by selling stuff and raising cash and maybe parking some of that money into some other areas like some volatility as insurance and some defensive plays, but it also looked like people were seeking out large cap value And so, a lot of the time on these down days, you have rotations that are happening underneath the surface. And I think that that's one of the things that exaggerated the downward move in the Russell as the day went on. And also perhaps its inability to kind of catch up to the other indices as they were trying to rally into the afternoon.
Right. Well, what's interesting in that, we have 11 sectors in the S&P, as most of us know. Out of those 11, 10 of them closed lower today. And the worst was information technology, as we've been talking about. That finished down 1.6%. But the only one up today, and I think it might have been Alex this morning, noticed Goldman Sachs was actually doing all right. Well, the financial sector was the only sector out of all 11 that were up today. And just
Yep.
on that, because we are talking about the bond market, and that's what's going to really drive everything tomorrow, the dollar and the currency market with the US dollar, particularly against the euro and the British pound, because those two follow in the next day, is also the bond market. And the 10-year was up 1 basis point today. But the noticeable thing was the 2-year was up 2. So you can see what's going in the curve there. Let's have a quick look at Apple, because that's kind of our baby that we do a lot on. We went on. That doesn't sound very good, does it? But
Can we also just because you touched on bonds, and I think that's an important subject to just touch on for a second here.
yeah.
A lot of time, we can look at the 2-year as kind of a proxy for rate hike expectations by the Fed, or if you don't have access to it, you can always look at the SHY ETF. It's a little more noisy, but it gives you the same kind of idea that as price goes down in those 2-year notes, that the expectation of a Fed rate hike is increasing, or as rate goes up on the 2-year.
Yeah. And we saw that in the curve, yeah.
But what was interesting too is on the longer end of the yield curve, even though that PPI was objectively pretty hot, it was definitely higher than expectations, which I think was 0.5, and it came in at 0.8. Bonds were not getting routed, which I thought was pretty interesting to see how, we saw a lot of the rate sensitive stuff getting sold off indiscriminately, but the bond market was kind of sanguine about the number.
Yeah, I mean, I spoke to a few, fixed interest desks this morning about that, and the feeling is, and this was the same thing last month, oh, well, this just can't keep going up. It's got to correct, so that this feeling, it's kind of interesting. Here we are at, nearly 10% annually, and so they've been saying that for how long? Well, first it was power of transitory. And now I think there's so many positions, it's one to hope that it does go down. And the basis is on oil or gas coming off the highs, but oil still and gasoline's pretty significant. I did see a report from Patrick over there on on gasoline consumption. He's estimating for next year a big drop in gasoline to start with, but as he said, it's really hard to speculate, right? Because of the variant. But yeah, it's important, and Alex keeps a good eye on that, on those bond markets and the way it flips around. But the psychology of everything right now, I got to say, I've been around for a while. I have never seen such sheepish behavior. The same reason, we were talking about this earlier, the same reason they're buying Apple, they're selling Apple, same reason they're buying bonds, they're selling bonds within days, right? With stocks, just pick one. Well, here's Apple. That was a perfect technical correction yesterday, and all this has been technical. There's been no news, right? So we had it off our, this is a 4-hour. We broke down, we had that perfect sell, off the Murray, the 2.8, the Chico, see how they work together. And then we just plummeted yesterday. We didn't even hold at the Chico at all. You do have all this room below potentially. Don't forget that. And if we're right on this being a delta chase, because of the low vol, and then vol increased, and there's so many calls sold to hedge assets. Let's look at this on a 1 hour. I think that was the one that really was pretty. Look at that. It couldn't even get, you got these wicks, so you always got to be careful if your only thing is Ichimoku or a trend line. Look at this wick here. Is that what is that, pre-market? Yeah, so that's pre-market, but look how we're getting these failures. And you got a pretty distinct downtrend now if you join these wicks up, which I should do, I guess. So this is the same on a lot of markets. This is identical to a lot of markets, no doubt. Can you see that line, or do I make it bigger? So keep an eye on that. And I've taken it off the wicks. I know a lot of people don't like that, but it's better not to be stopped outright. But look at your supports for overnight if that does anything. We're under this cloud. It's really got to get above that cloud again, or at least above the tanking to give it energy. That's 1 hour, right? So there we have it on that. Oil, I'll touch on that briefly. We just had the API number that's on the side if you want to look at it. It was another big build in Cushing. This is Cushing, right? WTI, that's the hub. This is just a 10-minute chart, but I just wanted to show that real quickly. This is a number of days that can't even get outside of S1 and S2. So this at least did S1. We never got over the pivot. We've got all this above us. So again, though, this is just a slow correction of that big move up. So think of it as an look at the daily. You can see it better. You can see I'll draw that little line there. You can see it's just come down hard and we're slowly correcting that. So almost identical pattern, isn't it, guys, to the S&P? A, B.
Yeah.
I mean, very similar. So it's not just oil people, for want of a better word, trading oil. I mean producers and oil shops. It's clearly still moving as a speculative asset, right? So we'll address those levels early in the morning. Natural gas, is it worth talking about? Not really at this point. It's still just doing, I know Madavi loves trading natural gas, so he might have something to say. But we're just sitting down here, right? And this is a 60-minute chart and it's still not showing you anything. Look at that. Got over the tank and just mainly because it had to, sideways. And it couldn't even have energy to go over that. That's all to do with weather models. You know, there's a part that's flipping. That will change as we get more into winter. That's pretty well all from me. As far as we've talked on the producer price index, there were some different numbers out of Europe earlier, and the only other thing out today was that small business indicator, optimism. Do you think that has any impact on the Russell? Perhaps. It was slightly up. Tomorrow's it, really, isn't it? It's going to be all that obsession. It's going to be really thin. There wasn't any earnings of any consequence after the market. Anything else to add, guys? Oh, we got Johnny. I think he's here now. He was going to give us a little bit of an update on the cryptocurrencies with Doge and Bitcoin, I believe. Johnny? Are you there, bud? He might have left. I thought he was going to pop in there. Well, that's all from us. We'll see everyone in the morning. And thank you, Alex from Markets and Mayhem, for joining us today. Great insights as always. You can follow. I'll put the Twitter handles on there, but Traders.com, Madavi4, Markets for Mayhem. Like and share if you like what we're doing, and any feedback, one of us will be sure to get back to you. Have a great evening. Relax. See you tomorrow.